Hey guys, welcome back. Now, once a month, Cathie Wood and the team at Ark Invest get together and they discuss the different markets they are investing in. And the great news for us is that they make this meeting available to all investors. Now, this month's meeting, the two topics they discussed from the crypto market were Ethereum and the institutional adoption of DeFi. So, for any fans of Ethereum, DeFi or Ark Invest, then this video is for you. So, in this video, we'll be listening in to their latest monthly meeting. As mentioned, first up, we have the latest developments for Ethereum, and second are the latest developments for decentralized finance and institutional adoption. Also, I've gone away and found all the charts and news stories that they were referring to, which I will also include. As always, if you do enjoy the video, then drop a like, always appreciated. Okay, first up, we have Ethereum. Take a look.
Our general thesis for Ethereum remains intact as it continues to be the go-to smart contracting platform in the blockchain space, with really strong network effects and has by a significant margin the highest adoption rates of the smart contracting platforms. So I'll give a few updates that are pretty exciting as of late. One is that the total supply of Ether locked in smart contracts has reached 2 to 3 times the amount of Ether held in centralized exchanges. Now this supply percentage represents a high level of demand for Ether as a form of collateral to be used in DeFi, and a move from centralized services, so you could think of Coinbase and Binance as centralized exchanges, to Ether as used in decentralized services. So these could be decentralized exchanges or decentralized lending markets. Additionally, we're seeing scaling solutions like side chains and rollups take some pressure off the Ethereum mainnet, which was seeing really high gas fees in the peaks in May that made it expensive for users to transact on the network. These scaling solutions are coming live and unlocking usability for some of the smaller level transactions that are occurring in the space. Additionally, the NFT market continues to be really hot. OpenSea recently broke records for its highest volume transaction month on record. And Axie Infinity, a blockchain-based game, also is breaking records. We've also seen just in the past week additional clarity into the roadmap for Ethereum with an upcoming Ethereum improvement proposal, EIP 1559, getting a proposed implementation date of August 4th. So this update, which changes some of the fee structures on Ethereum to make them more predictable for users, and also pave the way for a larger ETH upgrade towards the end of the year or in early next year. It's really good to see this clarity in the roadmap, and is something that can give investors, particularly institutions, confidence as they look towards making an investment in Ether, the asset, and watch the Ethereum blockchain space as a whole as it evolves.
So they mention Ethereum being the go-to smart contract platform, Ethereum having the highest adoption rates of any smart contract platform, and that it's also showing really strong network effects. And the network effect is something worth noting. You see, when it comes to the stock market, one of the most common ways to value a business is to measure its cash flow. Basically, how much money the company's able to pump out each month. Now, one of the biggest criticisms for cryptos and things like gold is that they don't produce cash flow. And this is why people find it so hard to value crypto assets. Now, one of the best ways to value a crypto asset is to look at its network effect. And obviously, the bigger the network and the faster the network is growing, then the more valuable the network. And based on these metrics, Ethereum is dominating. And as of right now, Ethereum's layer 2 solutions are beginning to roll out, and the platforms using them are beginning to break records. We had OpenSea and Axie Infinity. Okay, next up we have the institutions and how they're thinking about and adopting decentralized finance. And just a heads up, DeFi has exploded in 2021, and even after the crash, there is still over $100 billion locked away in DeFi protocols. And where there's money being made, institutions are chomping at the bit, wanting to get involved and take their slice. Check it out.
So you could characterize adoption of DeFi or decentralized finance in 2020 as being largely retail or perhaps smaller family office based. From an institutional point of view, it might have looked promising, but still experimental and without the typical financial and regulatory guardrails that institutions are used to working with. You can think of robust reporting, know your customer, anti-money laundering processes, and things like that. An institution, for example, is not going to conduct their investing using a browser-based extension like MetaMask, for example. So we believe institutions have been watching DeFi as it's been around longer and more battle-tested, especially going through the turbulent market cycle of the past few months, notably without any systemic failures, and as the infrastructure is built around it that will enable them to get exposure for the first time, really. And so of recently, in Q2, we've seen the bridges between institutions and DeFi really start to be built and launch. 3 notable players in the past month launched lending products tailored specifically for institutions, which add a wrapper of KYC, AML processes around their DeFi projects to make it easier for banks and institutions to gain access to some of the high yield lending markets, particularly via stablecoins that we see in DeFi. This is generally making it easier for banks and institutions to dip their toes into DeFi, and the high yield products may be the carrot that they need to really dive in and start exploring DeFi. Each of these DeFi projects has a significantly different or a slightly different approach to attracting institutions, kind of having to balance the ideals of open finance with the needs of an institution that's regulated by a central body. So watching how they walk that line and balance the levels of decentralization that their protocol offers is something else that we're watching closely.
So when it comes to institutions, the 2 main sticking points to adoption are KYC and AML. KYC stands for Know Your Customer, and basically regulators require financial companies to verify the identity, the suitability, and tell the risks of a product or service. And AML stands for anti-money laundering. Regulators also require financial companies to monitor their clients to prevent money laundering. And they require companies to report any financial crime to regulators. So from a regulation point of view, these 2 policies are the main difference between CeFi and DeFi. But as we saw, the bridge between these 2 is beginning to get built, which will bring in a lot more institutions. So there you are, guys. As you can see, Ark Invest remain very bullish on Ethereum, stating that it's still the go-to smart contract of choice. The NFT platform OpenSea and the new Axie Infinity game are breaking records, and DeFi is beginning to evolve to include KYC and AML, which will help bring in more institutions. And that is it for the Ark Invest monthly meet. Just to say then, if you enjoyed the video, drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.